Hello everyone, welcome back to the US Stock GPS channel. Today the market pulled back, ending its 7-day winning streak with small cap stocks leading the decline. The selling was broad, but not panic driven. It looked more like a healthy consolidation and profit-taking phase. Meanwhile, gold broke above $4,000 per ounce for the first time ever. Because of the ongoing US government shutdown, many official economic data releases have been delayed or suspended, forcing investors to rely on alternative indicators. This morning, a New York Fed consumer expectations survey showed weaker sentiment and rising inflation expectations, which hurt confidence and triggered profit-taking. With valuations stretched and technical indicators overbought, money rotated out of high-beta tech stocks and into defensive sectors like utilities, healthcare, and gold. The Nasdaq fell the most, while defensive sectors held up better. It's a classic consolidation day. Investors are now waiting for clearer guidance from the Federal Reserve on when rate cuts might actually begin. Within sectors, semiconductors led the decline. The SOX index dropped about 2.24%. The main pressure came from renewed worries that US regulators are tightening chip export rules, especially targeting China. That raised fears about lower future sales and margins. For example, Applied Materials warned that the new restrictions could reduce its 2026 revenue by about $600 million. Some chip and tech peers also signaled margin weakness, making investors question whether AI-related cloud or GPU rental businesses can stay profitable in the long run. Let's look at some individual names. Applied Materials, a key supplier of semiconductor manufacturing equipment and services, said US. Export limits to China could have a $710 million impact on revenue in late 2025 and 2026. The stock fell 5.52% today. Other semiconductors also dropped sharply, including Micron, Analog Devices, NXP Semiconductors, ON Semiconductor, Lattice Semiconductor, and KLA Corporation. NXPI, down 5.12%. On semiconductor, down 4.33%. Lam Research, LRCX, down 5.9%. One bright spot was AMD, Advanced Micro Devices. After a huge rally yesterday on its reported AI chip partnership with OpenAI and an intraday pullback, AMD still showed strong resilience today, up 3.83%. That means buyers are still active, but short-term momentum is cooling, which is a healthy consolidation. Most of the optimism about AMD's revenue growth has now been priced in, so near-term upside is limited. If the stock stabilizes around the $207, $210 support zone, or if it breaks above today's high on strong volume, investors could consider building a position gradually. Many semiconductor and AI hardware names have surged lately, so today's pullback looks mostly like short-term profit-taking, especially in momentum and quant-driven strategies. Western Digital and Seagate, STX, were hit hard today. Both are in the data storage hardware industry, a cyclical space that reacts sharply to tech sector sentiment. When semiconductors weaken, storage stocks often fall even more. WDC dropped about 5.1%, while STX plunged 7.34% on heavy volume, touching its 20-day moving average. Both stocks had rallied strongly this year thanks to optimism around AI and data center storage demand. But when valuations rise too quickly, even a small miss in margin or demand expectations can trigger a correction. Part of today's drop came from profit-taking and institutional trimming, for example. HB Wealth Management LLC recently cut its position in WDC. Short-term traders might consider trimming positions in STX to guard against further downside. Oracle has been consolidating after a strong run, mostly driven by expectations for large AI and cloud infrastructure contracts. However, reports suggest Oracle's GPU rental business, based on NVIDIA chips, has relatively low margins, around 14%, raising doubts about its scalability. If Oracle breaks above its current consolidation zone on strong volume, it could be a fresh entry point. Palantir rebounded to around $182 after clarifying concerns about the Army's internal security risk report. If the stock can reclaim the $190, $195 range on heavy volume, that would be a signal to add. NVIDIA has been consolidating since August. It's better to wait for a high volume breakout before adding or entering new positions. Tesla fell about 4% today after announcing cheaper standard versions of the Model Y and Model 3. While the lower price points could boost volume, analysts worry they might cannibalize higher margin models instead of expanding market share. Tesla is at a turning point. Its pricing strategy, product mix, and long-term push into AI and robotics will be key dividing lines for investors. Given today's pullback, it's best to wait for a strong breakout with volume before buying, avoid chasing. Yesterday, Bloomberg reported that the SEC is investigating AppLovin over its data collection practices. The stock dropped about 14%. If you're interested in this name, wait for stabilization before considering entry. Dell, on the other hand, just raised its long-term growth outlook. It now expects annual revenue growth of 7%, 9%, up from 3%, 4%, and EPS growth of at least 15%, up from 8%, driven by soaring AI server demand. Dell reaffirmed its current quarter and full-year guidance and expects AI server shipments to hit $20 billion in 2026. This one looks attractive. You could start a small position now and add more if it breaks out with strong volume. Now, back to gold. It's been climbing for days, attracting momentum traders and trend-following funds, pushing the rally higher. Today, it broke the $4,000 psychological barrier, triggering stop orders and short covering that accelerated the surge. Strong inflows into gold ETFs also show growing investor interest in precious metals. Technically, gold remains in a powerful uptrend, and short-term pullbacks may be limited as momentum keeps building. Looking ahead, watch whether the major indices can hold at support levels. If Treasury yields ease and the Fed maintains a dovish tone, the market could rebound later this week. All right, friends, thanks for watching. If you found this video helpful, please like and subscribe. See you next time.